Hi, hello everyone. Welcome back or welcome if you are new subscribers to our YouTube channel. We talk about macroeconomy and technology. I'm your host, Marc, fund manager at Merill Funds. I've been managing money for over 2 decades. Now, today with us in our Valletta office, our blockchains and crypto expert, Damien Bonello, blockchain researcher at Simply Stacking, a blockchain infrastructures company based here in Malta. Welcome, Damien. As always, it's a pleasure to have you. Last time you have been back from New York to the conference, and now you are back from Paris this time, and you will tell us a little bit more about what we can expect for the near futures. So before we start our journey, here I want to give a little bit some context why Damien and why we have a connections. Damien used to work for the asset management as a financial analyst, so he was on the traditional finance, more a researcher, I will say, on the semiconductor. And back at that time, we're back 2019, the team was analyzing all the semiconductors industry, all the supply chains. I know for you maybe it's quite a well-known names, NVIDIA, but back at that time, only hardcore gamers used to understand who is NVIDIA because they used to need it for their graphic card. So to finish the introductions, do not hesitate to subscribe to our channel. And for more insight, you can subscribe also to our LinkedIn page, you can see here, or our website. So thank you. Now you get the disclaimer, 5 seconds on your screen. Let me tell you one thing, blockchain and crypto are not a part of our universe because we are UCIT funds, but we try to bring you some insight and we try to have like an objective visions as an observer because we are not taking part on our allocations of this type of asset class. So yes. Hi, so Damien, welcome back. Thanks for having you because I know you are traveling a lot this time. You have been in New York, been Paris. So maybe tell us what's your feeling and how's the driver at the moment of the crypto market?
Right. So, yeah, I just came back from Paris not too long ago. It was overall a very good conference. There was it was good to see a lot of these big institutions at the place. You know, you have the people, the providers of the ETFs, Vanek were there. I think I saw a few people from BlackRock as well. So that was very interesting coming from a space where usually institutions are afraid to interact with blockchain. But yeah, one of the biggest drivers, or a couple of the big drivers in recent months, it's probably institutions coming in, more ETFs getting approved in like these big jurisdictions. You know, a couple of months ago you had the US market got opened for ETFs, Bitcoin ETF. A few days ago, Hong Kong opened trading for the Bitcoin ETF. In the first day, there was around 250 million worth of inflows into that one ETF, which is quite a lot of money, but significantly less than the US opening day for sure. But still, I think the hype is there. Another sort of narrative driving people towards the space is the fact that there's a lot of new things that people can experience on the chain. Onboarding is getting more it's easier to onboard people from a user experience perspective. Lots of payment processors are also accepting, you know, people to deposit fiat currency, US dollar, and be able to convert it into crypto. You have people like Stripe announcing this. You have PayPal announcing that you could buy various crypto within their own platform. I just think there's a lot of adoption from the institution sides, business sides that are sort of driving retail into the space. Apart from that, there are a few interesting narratives in crypto. I wouldn't say that they're the main driver, but they're still significant. You know, such as restaking, this new concept, not new concept, but a new concept on Ethereum, where you can have your Ethereum, you stake it, you get around 3% in rewards, and then with that staked Ethereum, you're allowed to stake it again for even more rewards.
Okay.
So, you know, this sort of narrative is attracting people who are sort of chasing more yield on a sort of stable asset, right? Because you would consider Ethereum to be more of a stable asset. Like the price isn't going to go up and down 20% in one day, hopefully, right? As opposed to these smaller cap sort of projects. Overall, I think that, you know, while restaking is a big narrative, there's still a lot that, you know, a lot of different narratives that are probably more interesting that are yet to come out in the future to actually drive more use case to blockchain rather than, you know, having use cases outside of blockchain using blockchain, right? Because restaking is purely for people in blockchain and for blockchain.
Thank you, Damien, for all this insight. I would say very interesting restaking and etc. Just a questions, maybe as a naive questions about halving. Do you think has an impact on the market?
Definitely, historically speaking, pre-halving of blockchain, of Bitcoin, sorry, there used to be a jump, let's say. There used to be a price increase up to the date, and then post date of the halving, if you look at the charts, lots of people were comparing charts, you would see a massive sort of uptick. However, this time we haven't seen that exactly play out. I mean, it's still probably too early to tell. This happened 2 weeks ago, possibly. I don't have the exact date, but it was quite recent. But if you've been following the markets recently, you would see that every day it's declining, you know, 2-3%. Right now, Bitcoin is at 57,000 from highs of 70,000 a month ago, probably. I think this time it was potentially different. It might have been priced in because of the hype of the institutions. So you had a lot of people buying, running up to the halving thanks to the adoption of the institutions. And then when the halving happened and people didn't see much price appreciation, maybe they started to panic, right? Because retail users in crypto are quite emotional. I mean, most of the market is really young, right? So whenever they don't see anything going their way, they sort of jump to safety in, you know, US dollar. So
What you mean here in this case, it's like this is the first investment. For them, these retail investors, like you say, they are young. Probably crypto is their first time, the first approach. They are not any experience for equities or bonds.
it's a possibility for sure. I mean, post-COVID, you know, there's a rush of liquidity. People might have gotten the wrong perception about stocks. You know, there's the volatility of the post-COVID, even in stocks, there's a lot of volatility. However, I think in crypto, a lot of these young people are sort of chasing, they're trying to narrow the gap between themselves and the wealthier people that, you know, I guess social media is flooded by. If you go on Instagram or wherever, you see all of these influencers with a ton of cash. And it's possible that, you know, the younger generation, they know that, okay, S&P is stable-ish, you know, you get, what, 13% a year on average, something like that. But with crypto, you could get 13% in a day. So a lot of people are chasing to sort of narrow the gap between them and the wealthy.
Yes, you think they are dreaming about being billionaire or millionaire overnight.
It's
really
completely possible.
Yes,
It's gambling. It's also, for these younger people, the crypto space can be seen as an alternative to the casino or internet gambling.
Okay.
Because you have a lot of these meme coins. You know, you have this Dogecoin. I'm not going to get into specific names, but a lot of people are banking on like the casino effect of crypto for wealth generation.
Okay, but you think like institutionals coming here big time, it will stabilize a little bit about this hype? And do you think also the opportunities in terms of profit will be reduced in this case?
It's a possibility. I think once the industry gets a bit more mature, it's a very likely scenario that these wild swings in prices would eventually die down, especially if most of the supply of certain cryptocurrencies are controlled by these stable institutions, right? You know, if the pension funds possibly, I mean, they will generally just hold on to those funds. They're not there to trade it and create a lot of volatility.
So in the way, it's like you can say a possible future here. It's like it will be just like a utility, like a payment, because you spoke about payment before. So crypto will be back to its roots and it could eliminate, if I understand well, the speculation effect and be like more like a medium for paying someone who's living in Alaska or I don't know.
That's the goal of Bitcoin. I don't know about other cryptocurrencies because like every cryptocurrency ideally tries to solve its own issue, not only being like a payment processor, right? You have Ethereum trying to be this sort of hub for a lot of DeFi, data settlement and whatnot. But eventually, eventually this should sort of settle down. I mean, crypto is possibly 10 years old at max. It's still quite early to judge its full potential.
Oh, okay, interesting. So I have a questions on that side. We're talking about cryptocurrency, but how is your view about CBDC, which is the stable coin of the central banks? It seems like central banks want to be a part of this race, and how is your view at that stage?
Right. So when it comes to the CBDCs, it's more of a centralized approach to blockchain because obviously everything will get issued by the central bank. It's an attempt to sort of bring, you know, the monetary, I guess, supply of that particular nation or in this case the EU, again within the hands of you know, the central bank. It's an attempt to be able to easily regulate blockchain, I would assume. I don't know that much about the CBDCs at the moment, so I can't give like proper insight on that. But my view is that it's just another attempt to sort of regain power from the decentralized forces that is happening.
Thank you for this part one. I hope the audience, you like this. If you want to see more about us, don't hesitate to visit our LinkedIn page, Merill Investor. You can have a weekly insight about the macro aspect, about technology. Now, let's finish here. You get the disclaimer, and thank you very much, and hope to see you for the part two. Thank you.
The content of this presentation has been prepared for general guidance and information purposes only. Any information provided throughout the presentation does not constitute financial, investment, professional advice, or recommendations.